Good morning. It's Wednesday, March 12th, about 5:30 a.m. Central Time. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. Let's get you ready for the trading day here. One benefit about the commodities markets, and I look at these markets and I check on them several times throughout the night. I get really excited when I see precious metals kind of moving up here. Gold silver ratio dropping down. Gold futures kind of stuck in a holding pattern at the moment, but I really like to see that copper and that silver really start to move up, as well as the platinum market. And again, it's a benefit of having a futures trading account over the ETFs and trading the miners and things like that. Not bashing them, they have their place in everyone's portfolio. I'm just saying that the futures markets give you that opportunity to act and react at different times here in the night when different news events happen. Because let's face it, this is a global market here, and this is a market where market moving headlines come out nearly 24 hours a day here. So, let's get back to things here. So the volatility, it continues in the equity markets as the US, Canada, and Europe, they're all sparring over these trade talks. And President Donald Trump, he announced a 25% tariff on steel and aluminum imports, which took into place last night. That's why you look at aluminum up $20. You look at copper up at about 8 cents here. That's 1.7% move in that copper market. It's the big mover and shaker in the overnight in the metals market. So it triggered an immediate response from the European Union, and it sparked a new phase here of the global trade war. So we're seeing some reactions from different countries like China, the UK, Australia, and the EU, all launching kind of swift and appropriate countermeasures. So the trade war has kind of taken this next phase here. Now you look at the overnight market, you have US equities. They've been looking for a bottoming formation here. And yesterday, we had quite a bit of volatility in the market because it was this 25% tariff one moment on Canada, then 50%. Then they were retaliating with electricity and things like that. And you just saw kind of a little bit of backpedaling here on different administrations as far as how aggressive they want to be with these tariffs and the threats of pushing the US into a recession and a global recession per se as well. So looking at the stock indices, bouncing off that key level support about 55 in the S&P 500. We had a lot of people come in, a lot of dip buyers that have been measuring out and mapping some levels on the charts here and trying to come in and pick some of those bottoms here for a reaction going upwards. And I'll get into some price targets on the equities going out later in this video. But now the focus here today, and it kind of gets us back to the basics here, is that we've got the crucial inflation data, and it's expected to show slowing price pressures here over the last month. So US CPI data is expected to show a 0.3% increase in February, which could reassure investors about the trajectory of inflation. Now, inflation has been kind of rising here into the end of the year as Trump took place in office here. Then it's kind of had a mixed bag of pictures here, and we're seeing some relief pressure after that WASD report yesterday with some of the grain prices coming off. We've seen some of the softs coming off as well. Coffee prices coming down. I'm no longer drinking a $200 cup of coffee. It's back down to $3.50. So we're back here in more normalized territory here on cocoa, coffee. Sugar prices are coming a bit off of their lowest levels after being beaten up. So a lot of these softs markets are starting to come back down, and the input costs are starting to come back down. Energy costs are starting to stabilize a bit. So we'll see what that does with the inflation and the trajectory of it. We do have key events here. So Canada does have an interest rate decision today. We have that US CPI. You get into Eurozone industrial production tomorrow. PPI and initial claims for us in the US. I'll be really watching both of those data there. And then that University of Michigan consumer sentiment coming out on Friday, which that number's been a little bit more politically driven, the inflation expectations. I think it's more of a poll than anything. And we know how that state swings here in their feelings about President Donald Trump. So looking at the precious metals markets, and again, that's not a political statement. These are all just observations, and nothing should be taken on this as pure investing advice on this channel here. If you want to have an account with Blue Line Futures, that's where you get real investing advice. So looking at the metals overnight here, you see gold futures. They are rebounding after stabilizing around that 29.15, and it's really the comments about the recession fears that kind of boosted that gold market a bit yesterday, and some weakness in the dollar index. The dollar is up just a bit here today, so you're seeing a little bit of pressure on that gold market. Now, the concerns are about stagflation and the potential interest rate cuts by the Federal Reserve this year, and that's really going to kind of map out when we get to that $3,000 level. And if we get to the $3,000 level, prices have been really stalling out here recently, and the markets are really trying to digest some of those geopolitical risks, and especially some of the developments with Ukraine and Russia here. We saw a truce that was announced yesterday. It was, at least the way that I perceived it, was that they were going to have a 30-day truce. Now, coming out of trading crude oil futures with clients extensively with Israel and Hamas and Gaza Strip and things like that, I mean, how long did those truces really last? They lasted like 24 hours. It was funny when a truce would be announced and we would see prices come back, that's when clients would take tactical long positions at key levels of support and also add some of these call options on the markets. And then we would see the truce unfold and things heat up again. And then you would have the Houthis coming in and Iran backing them, potential for war between Iran in Israel, and then prices would go back up again. So I think that it's a very fragile situation in Ukraine and Russia at the moment here, and I think that these truces, when you get these pullbacks, could be an opportunity to play an unwind of that type of development, as sad as it is. So looking at the overnight price action, the precious metals, you do got gold futures got up to 29.3150. I mean, come on. You can't do it. So that tells me something. I mean, the market is either making this double top in the market, but it really is who is selling up at those levels at the 29.3150. Is it some kind of massive hedge fund, central bank, somebody who's unwinding at those levels? Or is it a lack of interest once we get up to these levels? Are they saying, hey, let's let some go. Let's go into other markets. I told you that, people went into the precious metals markets, and then when they see U.S. equities decline like this, they start to reassess, hey, do I want to deploy capital more into the precious metals? Do I want to look at deploying capital into some of the larger names, some of the larger stocks out there that we know that large institutional money will come in and follow at key valuation levels? So you're getting a rotation out of a lot of different commodities, and perhaps you're getting people come out of the gold market. They're looking at things like platinum, copper, aluminum, and also the silver. And again, gold silver ratio dropping down to 87-1 here. Excuse me. So looking at that gold market overnight, key level support, it's at 29.1410. That's where that low of the day is. So looking at things, the pivot point on the gold market is going to be 29.1080. Your key levels of support, because the compression we've seen in volatility over the last several trading days, is going to be almost every $10. 2,900, that's your psychological. 29.92, really I think it's from 92 down to 85, then 28.76 down to 28.74. So you have these like pocket levels of support, and it's in a pretty tight range. You start looking at resistance, well, it's 29.39 to 41, then 29.57 to 60, and then 29.78 to 85. So people hate pocket level support because the level's so vague, but when you get a compression of volatility, what happens is that all of a sudden volatility releases itself, and that's what we saw in the U.S. equity markets. That's when you get this big dropout on there. Now, if you're looking for the levels in silver, I'm going to put that in the metals edge here, put a little bit more details, and then also give you the trend reversal points that I'm looking at. So if you are not getting the metals edge, it's a report that I write here that gives you more details here as far as support resistance levels, some of the key news that are coming out to drive it, some of the seasonal factors here. Like one thing that I don't like is if you look at that seasonal chart, and people will use that kind of as a roadmap, is you'll see that gold and silver tend to decline into the end of March here. Now, seasonal factors are just seasonal factors, or things that happened in the past. Doesn't mean that they'll necessarily happen in the future, but it's just one tool in our toolbox. You got your hammer, your screwdriver, your wrench, your pliers, your things like that. So you want to have your seasonals, you want to have your support resistance levels, you want to pay attention to long-term technicals, you want to see how flows happen, who's buying, who's selling in here, and that's where we get into things like ETF flows. You look at the exchange-traded funds. Well, they added 92,000 ounces of gold holdings to their last trading session. That brings this year's net purchases to 3.3 million ounces. So 3.3 million ounces. You get to the ETF flows for the silver, and this is where I think it becomes important to look at ETF flows, is that they added 778,000 troy ounces of silver holdings in the last trading session. Well, that sounds great, right? Well, but the problem is that you look at year to date where silver ETF holdings are at, and they are minus 1.2%. So the thing about silver is you need, if you're that guy out there that's going, okay, silver's going to $50, which you just made this number up. It's just a psychological number for you. Where I could say, hey, when silver gets to 48, that's where I'm unloading everything. For each person, it's going to be a little bit different. And silver futures will rise until they stop rising, and they will go when they start going down. So what that number is it exactly $50? I don't think so. Could be 54 like it was last time. Could be 48, could be 36, could be 38. Who knows? But the point where I'm getting at is that in order for silver to achieve that level, you do need China to be importing quite a bit of copper. You do need, because of the fact that copper demand is a reflection of silver demand because of the industrial application and things like that. But you need the ETF inflows. It's the investor interest at different degrees. So all the traders right now in the silver market are basically in the futures markets. That's where the party is at. That's where most of the things are going at. When prices get too high, you'll see a lack of investor demand on the physical side because it just costs too much as an outlay. They'll look for ways to get into it on a leverage perspective, and they generally look at the futures contracts. There's 1,000-ounce futures, silver futures. That's the one that most of the participants are playing in. Now, if you get the ETF inflows and you start to see that number turn positive, and all of a sudden it's an 8 or 10% interest in the silver market, and that number turns around, well, that's where you get those silver moving into the high 30s, 40s, 50s, whatever number that you got in your head. So gold, the year-to-date ETF inflows is up 4%. So that's why gold futures continue to attract interest. People, wealth advisors, things like that are continuing to layer in gold into their portfolios, just like how they layer in Bitcoin in the portfolios, but not necessarily Ethereum, which could be considered, the poor man's gold or poor man's Bitcoin, whatever. So getting a little bit off topic here, but let's check on the outside markets here because you do have U.S. equities here. You're going to want to start to look at rolling over from March to June on the S&P 500, and with the level of volatility in the markets, I think you can time the roll on here where you're selling one, buying the other, buying the other first and selling the other, as long as you keep that relatively tight. Just because of the average range on a 5-minute bar in the S&P 500 being about 15 points here. So looking at the S&P 500 up 37, 56.14 last, again 55.55, about your key level of support here. You'll want to note that Goldman Sachs, they did cut their price target, and this is where I talked about long-term view on some of these different asset classes here. So I always look at things from my personal standpoint is that I look at things from a long-term perspective, and that's where much of my personal wealth has been created. I was an active buyer once we saw the stock market collapse, during September 11th, during the financial crisis, during COVID, during the financial crisis when I bought my first home, during COVID was when I bought the place on the beach where I reside at right now. You got to identify these key opportunities here, and it's Warren Buffett saying that you want to be buying when there's just that fear, and you want to be selling when everyone's yelling. Again, when the cab driver is talking about, how much money he's making on NVIDIA and Bitcoin, that's when you want to think about, maybe put options or exiting the door. And then now I can show you text messages, countless ones. You got people asking about their 401ks, the recession, the top end, blah, blah, blah. It's going to zero, things like that. They're freaking out. And that's oftentimes been the key indicator as to when to come in and start buying that market. So Goldman Sachs, they did ratchet down from 6,500 to 6,200 on the S&P 500, and where you look at where we're at right now is about 56.16. So that's going to be about a 10% rise from here. So people that have cash on the sidelines, that's where you start to look to deploy that cash. So I think wealth is really created on buying the dip. And if you want to explore a wealth portfolio, you can talk with Blue Line Capital. That's our sister company here. My partner, Bill Baruch, oftentimes on CNBC. It's one of our portfolio managers here that helps you build out portfolios with your goals and needs in mind. So Goldman Sachs, they also raised their stocks Europe 600 earnings to share growth forecast from 4% to 6%. due to a stronger medium economic outlook in the euro area. And that's where you see the euro currency up at 109 and really outpacing the dollar index right now. So they did cite on the US side, there's concerns about the economic growth and some geopolitical uncertainties. So a couple things going on in the equity markets here and that heightened volatility. You look at the energy markets for WTI crude up about 1% overnight here. In the US, it cut its forecast for global oversupply. You saw the EIA, they slashed their production or their prediction for a surplus here this year, and they have their outlook for a surplus in 2026. Diminished flows here from Iran and Venezuela, and the overall sentiment, of course, remains fragile in the energy markets, but I do believe that energy prices are going to come up and recapture that $70 handle here. So natural gas lower on the overnight session here, down about 3%. Many traders identified kind of a key technical formation in there, probable topping formation that I discussed. They acted on it, and your key levels of support on natural gas, where we'll be looking at potentially covering some of those positions, 424, 414, and 404. So longer video here, had a lot to unpack, a lot on my mind. Woke up like 20 times last night looking at these markets, thinking about things here, thinking about volatility, taking a step back here, take a breather, look at things, reassess from a long-term standpoint, like focusing on, hey, where's the S&P? Looks pretty gloomy right now, but what's the long-term picture? 61, 6,300, things like that. We'll get through this tariff nonsense. Things will stabilize here, and then you're going to end up going, I should have bought on the dip, but that's just my opinion. So, you got any questions, give us a call. You want to open up an account, you want to get the Metals Edge, things like that, shoot an email to info@BlueLineFutures. And remember that futures and commodities trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.